Bitcoin is kind of going sideways a little bit, I think, while these other ecosystems are having their moment. I think probably we have another big surge up towards the end of the year in Bitcoin as the Fed starts the cutting cycle. And this kind of crypto idea just keeps gaining momentum.
Novogratz begins by acknowledging something every investor has noticed. Bitcoin has been consolidating. Despite its reputation for volatility, the price has gone relatively sideways compared to the explosive growth in ecosystems like Solana and Ethereum. Why? In his view, it's partly because capital that might otherwise flow into Bitcoin is currently being allocated to other parts of the crypto market.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Listen, Bitcoin's at a consolidation right now, partly because you're seeing a lot of these treasury companies in other coins take their shot, right? So Tom Lee's company, the Ethereum company have come. We closed just yesterday $1.65 billion in Forward Industries, a Solana ecosystem company, which I'd love to talk about in a second. That's bringing energy into the crypto space. It's bringing money into the crypto space. And Bitcoin is kind of going sideways a little bit, I think, while these other ecosystems are having their moment. I think probably we have another big surge up towards the end of the year in Bitcoin as the Fed starts the cutting cycle. And this kind of crypto idea just keeps gaining momentum. It's interesting. The SEC chair about 2 weeks ago, Paul Atkins, said he wants all markets to move on chain. And that is such a radical departure from where we were. And it's a radical statement. And that wasn't a one-off speech, right? We continue every couple days. There's another comment that's pushing things in the right direction. You saw NASDAQ's announcement yesterday. I've been saying for, years, this blockchain revolution really had just been Bitcoin as a store of value and then stable coins as cross-border payments. And what had held us back was blockchains being fast enough, safe enough, secure enough, and trusted enough, and more importantly, a regulatory framework that allowed people to experiment. And so now we have both.
So here's the question. You said you think that there's this consolidation phase in part because money that might have been either otherwise pushing the price of Bitcoin higher is, you tell me, is it coming out of Bitcoin into stable coins and other coins, or is it just not moving into Bitcoin at the same pace because there are these other options? And if all of that is true, therefore, how do you think about the ultimate market?
Well, listen, I think crypto market is $4.5 trillion, right? Global wealth market is $400 trillion. And so we got a long way to go, right? We're just getting started. Think about this company Ford that we just, Forward Industries, a ticker Ford that we're launching, right? That's $1.65 billion that came in. That's new money, dollars into the crypto space, right? This is a Solana. Why Solana at this moment? Total transactions per second Solana can do in a day is 14 billion. That's more than total transactions on equities, fixed income, commodities, and foreign exchange, right? And so you've got a blockchain that's now fast enough, tailor-made to be the blockchain for financial markets. And you got an SEC chair saying, I want you to build on chain. And so those two things are lining up. I'm calling this the season of Sol. But right behind us, you've got Dan Moorhead, who's coming with a Sol fund, a Sol treasury company. And then you've got two ETFs coming right after that. And so that money pouring into Solana ecosystem right now, because people see that as a potential winner in the financial market space, the blockchain
But if Solana wins, this is the thing that I'm trying to figure out, and this is maybe why I was asking the question. And maybe you could say they all have different purposes, but at some level, maybe they don't. So if you think about Solana, if Solana wins, does Ethereum not? If Ethereum wins, does Solana not? Do you put Bitcoin in a completely different category? And then meantime, you have all these different trust companies and others that are levering themselves up in certain ways. Sometimes they're these sort of levered ETFs. And how we should think about that, which is at some level a speculation on top of all of this.
Yeah. Listen, so I think Bitcoin as a store of value stands by itself. It's digital gold. It's going to be digital gold. It's got a community of people that trust it. Think about what blockchains are or cryptos are. They're communities of people that decided to trust their hard-earned wealth in this technology, in this community, because they don't trust, because we have a breakdown in trust in the government, in between political parties, between countries, right? Trust is in a bear market and an accelerating one. And so I think Bitcoin's going nowhere but up over time. Ethereum has its own community and its own narrative and its own use case. Yes, it will compete against Solana and other blockchains, but it's not like we're going to have one blockchain to rule them all. And so this is healthy competition to kind of rebuild the financial architecture that the whole world runs on. I saw you had Mike Cagney on earlier on, right? He's got a blockchain that he's doing his stuff on. What might turn out is maybe Mike's product ends up trading on his blockchain, or maybe it ends up trading on the Solana blockchain, right? And so you're going to see a consolidation of change. You're going to see bridges between them. But most importantly for the space, money is going to move into the space as we now start moving from narrative to plumbing.
So does this mean Solana will replace Ethereum, or that Ethereum will fade into irrelevance? Not at all. Novogratz emphasizes that we shouldn't think of this as a winner-take-all environment. Bitcoin, he argues, is in its own category. It's digital gold. It stands apart as a store of value that is trusted by a global community precisely because it's simple, decentralized, and battle-tested. Nothing competes with Bitcoin on that front. Ethereum, meanwhile, continues to lead in smart contracts, decentralized finance, and developer activity.
So we're talking about the 40-year supercycle of bonds. Again, the bedrock of the entire global financial system and the mathematical absurdity of it all coming to an end. And to really understand where we're going, we sort of have to understand where we came from. You see, in 1980, when Paul Volcker tried to kill inflation, we raised rates to 15%. That was the heyday for fixed income, 15% on your money. But over the last 40 years, the trend has gone bonds up and yields down. For 40 years, it was buying every dip. Every crisis made bonds more valuable. Central banks coordinated globally to make sure that anyone could have made money just buying bonds, just buying the dip. An entire generation built their retirement on that. But by 2020, as I showed you earlier, it reached peak absurdity. We saw just how broken this system had become. Again, in the United States, in the reserve asset of the world, $10 million only gave you $50,000. In Japan, 30% of the people are over 65. They're in that retirement period. They need the yield. They couldn't get any. Again, all around the world, we saw the absurdity. And this wasn't because of a free market, of course. It was grand coordination. Central banks worked together to pump liquidity through the fixed income market. And every central bank, every pension fund, every insurance company was required to buy bonds, was mandated, was regulated to hold them. And for 40 years, the game was rigged to go up in one direction. Now, we saw this come to an end here. COVID was not the problem. It was a pinprick. It's what saw this entire momentum shift. And suddenly the coordination broke. Inflation started coming back. And for the first time in 2 generations, bond investors learned what their grandparents knew before them, is that, yeah, bonds can lose money, a lot of money. So how big is this big unwind? The end of this 40-year trend. And where are we in this new game? Well, let's just say if I was registering for like an ultra marathon, I'm just getting to the registration desk. We're just barely getting started. We're about to see the biggest shift in capital that we've seen in generations. I think it's the biggest opportunity we've seen in 500 years. So we have $300 trillion in global fixed income, or in the debt market. 145 trillion of that is in the fixed income market. And this little orange sliver that we have at the bottom is Bitcoin, with about $12 trillion. It's like an ocean that's about to fill into a swimming pool. And the problem is that this can't be fixed. It certainly can't be fixed with conventional tools, because positive yields don't fix this. If you just take a look at this chart, you can see in the United States, $37 trillion at about 5% rates. That's 1.75 trillion just in interest service alone. 36% of all revenue of the government goes to just servicing the debt. And if they tried to normalize that to, say, 7%, that becomes over 50% of the revenue of the government. Japan, it's even worse. As we know, it's further down the path. We can see rates went from half a point all the way down to negative and have rebounded all the way back to half a point. In a population that's over 30% of them are retired and need fixed income. And if they got that normalized to just 2%, it would be 85% of the revenue going to just service the debt. The UK, it's not quite as severe. Debt's over 3 trillion pounds at a 5% rate. It's about 14, 15% of the revenue to service the debt. But again, if that normalized to, say, 7%, that's over 25% of the revenue. It's a big problem. So it's an inescapable trap. There's no way out. It's a mathematical certainty. They could raise rates, bankrupt the government. They could keep rates below inflation, liquidate the bondholders. Of course, they can print more money. They face hyperinflation. So which way do they go? Now, this is not a new problem. The governments have known about this for a long time. And the good news for the governments is they have a playbook. The playbook is something the BIS and the IMF have put a paper out called the liquidation of government debt. So when the governments have a lot of debt and they can't afford it, what are they going to do? Well, they do what they did in the 1940s, which is they liquidate it. Financial repression.
At the heart of Novogratz's thesis is a simple but profound idea. Trust is collapsing in traditional systems. Trust in governments is fading. Trust between political parties has eroded. Trust between nations is deteriorating. Even trust in financial institutions, from banks to central banks, is under pressure. And when trust collapses, people look for alternatives. Bitcoin and crypto represent a new trust mechanism, one rooted not in centralized institutions, but in decentralized networks. That's why Bitcoin, in his words, is going nowhere but up in the long term.